Hey everyone, welcome back, and if you've been watching tech stocks lately, you're going to want to pay close attention to what's happening right now, because a company that doesn't even have a stock ticker yet is already shaking up the market in a pretty significant way. So here's the deal. OpenAI, yes, the company behind ChatGPT, the AI chatbot that basically changed how millions of people think about technology, is reportedly moving closer to an IPO, an initial public offering, where they'd finally go public and let everyday investors buy shares. And you'd think that would be exciting news for everyone in the AI space, right? More money, more hype, more momentum. But here's where it gets interesting and honestly a little surprising. The mere possibility of OpenAI going public is actually spooking investors and sending some major stocks lower. We're talking about companies like Oracle, which have built significant business relationships with OpenAI and have been riding the AI wave pretty hard over the past couple of years. Now, why would an OpenAI IPO be bad news for Oracle? Let me break this down in simple terms. Oracle has been one of OpenAI's key infrastructure partners. They've been providing cloud computing services to support OpenAI's massive data and processing needs. That partnership has been a huge deal for Oracle's revenue story and has helped justify its sky-high valuation in the eyes of investors. But here's the catch: when OpenAI eventually goes public, it's going to need to raise its own capital, build out its own infrastructure, and quite possibly become more independent over time. There's a very real concern among investors that once OpenAI has its own war chest from a public offering, it might reduce its reliance on partners like Oracle. And if that revenue stream shrinks or disappears? Well, suddenly Oracle's growth story doesn't look quite as shiny. And it's not just Oracle feeling the heat. Other companies that have become closely tied to OpenAI's success, whether through cloud services, investment relationships, or technology partnerships, are also seeing some turbulence. The market is essentially repricing the risk that comes with being heavily exposed to a single, very powerful, and very unpredictable partner like OpenAI. When that partner is about to become a publicly traded competitor for capital and talent and infrastructure investment, the calculus changes pretty dramatically. There's also the broader question of valuation. OpenAI is expected to pursue a valuation that could be absolutely enormous. We're potentially talking hundreds of billions of dollars. When a company of that size enters public markets, it can actually pull investment dollars away from other AI-related stocks. Investors who want AI exposure might just say, "Why do I need Oracle or Microsoft or whoever else when I can just buy OpenAI directly?" That kind of sentiment shift can have real consequences for stocks that have been benefiting from indirect AI exposure. What's really fascinating here is that this is a textbook example of how powerful market anticipation is. OpenAI hasn't even filed for an IPO officially yet. No S-1 document, no confirmed timeline, no definitive announcement, and already the ripple effects are being felt across billions of dollars in market capitalization. That's the kind of gravitational pull that only a handful of companies in history have ever had. So the big question everyone in finance and tech is wrestling with right now is this: will the OpenAI IPO ultimately lift all boats in the AI economy? Or will it actually pull the rug out from under the companies that helped build OpenAI's empire in the first place? Because sometimes, the very thing you helped create becomes the biggest competition you've ever faced, and in the world of AI, that story is only just beginning.